In this video, I'll explain the recent turbulent history of cyber insurance, discuss its present reality, and offer an opinion on whether cyber insurance has a future. The cyber threat to small businesses has never been greater than now, and the financial livelihood of small business owners could be severely impacted by a cyber attack. Hey, it's John Byrne here, entrepreneur, insurance professional, online educator, and founder of Surviving Cyber, where I help small business owners get to grips with cyber risk. This short video series about cyber risk and cyber insurance will help you prepare for an incident and keep your small business and your people safe. Now, today, we end the video series by asking, does cyber insurance have a future? So here's what I'll cover in today's video. I'll begin with a brief history of cyber insurance, just to tell you how we got here. And then I'll look at the cyber insurance market. I'll move on after that to telling you about current market conditions right now. And then we'll have a look at some future trends that I'd expect to see. I'll then have a few words about the cybersecurity industry, which is highly relevant to cyber insurance. And I'll finish with some conclusions. So you may be wondering where cyber insurance came from. It can trace its origins back to the 1990s, when the technology, media and telecoms companies sought some protection for their significant exposures. They were mainly concerned about liability exposures from their business, so they really understood that cyber risk existed back then. Many policies covered cyber exposures by virtue of not excluding it, and so what became known as silent cover was existing in property and liability policies. To address this issue, the Lloyd's market in particular has insisted on either affirmative declarations of cover or exclusions in their policies. Another form of cover was an add-on endorsement on policies, such as adding on to professional indemnity policies. This usually provides limited cover. Over time, the standalone cyber insurance policies that we now know were developed. These provide comprehensive cover and services. These services are provided both before an incident occurs, during the incident, and after the incident. These policies generally provide broad cover, and their scope was extended in recent years to include issues such as business interruption losses and fraud covers arising from cyber events. However, more recently, the scope of cover has been narrowing as insurance companies have been suffering large losses on their cyber insurance underwriting. The scale of the deterioration is clear from the FBI Internet Crime Report, which showed that cyber-related complaints increased by 180% in the last 5 years, resulting in 18.7 billion in losses or claims. All of this is to show that cyber insurance has become one of the most dynamic areas of insurance. Next, I want to show you some facts that will help you understand the cyber insurance market. Currently, it's valued at about $7 billion, and it has grown by a multiple of 4 times since 2018. The industry is highly focused on North America, where the market is thought to be in excess of $5 billion. Europe's market is about $1 billion, and the rest of the world a little less. However, all markets are expected to grow strongly. Cyber insurance is bought by all size companies from enterprise to micro, and there is even a personal cyber insurance market now. It's all been driven by media reports and much stricter regulation around data privacy and data protection. Business partners are also playing their part by demanding evidence of cybersecurity from smaller companies. The sectors that are driving demand are those that are most exposed, such as healthcare, professional services, financial services, retail, manufacturing and education, to mention just a few. Globally, the take-up rate for cyber insurance is still relatively low at around 10%. This is mainly because customers have struggled to understand their risks and the insurance benefits available from cyber insurance. Insurance brokers have struggled to explain these benefits. There has been a significant claims deterioration in the last few years, especially between 2019 and 2021, when ransomware, business email compromise, and business interruption losses have had a large impact. Cyber criminals have also exploited the vulnerabilities created by working from home and remote working. And finally, all of this has led to insurer losses of approximately $7 billion in 2021. Next, we look at the market right now. And as you've seen, the global market for cyber insurance continues to grow strongly. Despite the overall low take-up rate, customer and broker education continues to be key to growing the market further. There are a relatively small number of global insurers and reinsurers who dominate this marketplace. The insured losses that I have spoken about of recent years have caused what is known as a hard market for cyber insurance. And this is a market where insurers have withdrawn, capacity has been restricted, and higher underwriting standards have been imposed. In addition to all of that, higher premium levels have been demanded by insurance companies to take these cyber risks. In fact, up to 300% increases were seen on some policies in 2021. Not surprisingly, it's now much harder to get insurance for what are considered to be substandard risks. And the sectors that are known to be highly exposed to cyber risk have been most severely impacted. Increasingly, insurance companies require evidence of the cyber posture, in other words, of the position of the company towards cyber risk. And insurers are now asking about cyber training for staff as one of their risk factors. More technical underwriting is gaining ground with insurance companies, and it really is seen as a prerequisite to maintaining a sustainable market for cyber insurance. And finally, a risk management approach to cyber risk is recommended for customers by cyber professionals globally. Next, I want to talk about some future trends that I'd expect to see. I believe that more of the European Union's 27 million SMEs will buy insurance. And I also expect personal cyber insurance to grow. Customers of all types will need better service-led solutions where insurers actually help solve the problem and not just pay for the consequences. Ransomware losses will continue to drive more technical and disciplined underwriting. We may continue to see insurers decrease their line sizes and tighten their risk appetites. The expectations around risk management and security will grow. And insurers will ask increasingly about process and people and not just technology risk. Cyber insurance will become increasingly important for boards of directors of all size companies. The future will show whether risks from remote working have been addressed properly or not. There may be a lingering COVID-19 risk in that many companies have not yet returned to full office-based work. And a hybrid environment does require cybersecurity that realigns with the new business model. In the future, connected devices, the Internet of Things, and 5G risks will all grow. And cyber criminals have been very effective at networking, collaborating, and upskilling. And they will use increasingly artificial intelligence and automation in order to attack. We're also more likely to see insurer partnerships with insurtechs and with IT vendors. Undoubtedly, data protection, privacy, and cybercrime legislation will continue to grow worldwide. And the insurance market will continue to be concerned about cyber aggregation control, that is, finding a way to control their total risk. Supply chain risk will also preoccupy the insurance market. That is, the need to look at not just the insured company, but all of the supplier companies to that insured company. And silent cyber cover will continue to be carved out of policies. In the long term, the sustainability of the insurance market will be the priority of the insurance industry. The tangible threat to the cyber insurance market is shown in the quote, "Cyber could be the widowmaker for the insurance industry." Before finishing, I'd like to say a few words about the cybersecurity industry. There's been a significant increase in global IT investment in cybersecurity that's been really visible over many years. It is a $400 billion industry expected by 2025, and this industry is growing very quickly, by a multiple of 4x since 2015. Remember back at the start, I told you the cyber insurance industry was expected to reach $25 billion. So you can see the scale of the cyber IT industry. There's a worldwide skills gap in the cybersecurity industry, and millions of jobs exist that cannot be filled. The cybersecurity industry is largely enterprise focused. That is, companies with big budgets who are informed buyers of these services. Generally, cybersecurity companies will offer consulting, software, hardware, and other services. Some may have an insurance offering also. Although there are efforts to draw together the cybersecurity industry and the insurance industry, for the most part, these two have operated independently of each other. I would ask whether the two industries could cooperate better in the service of their mutual client. This is especially the case for smaller companies who have inadequate response skills for a cyber incident. In conclusion, I would argue that cyber risk is mission critical for many companies. It is in fact a key boardroom issue. This is especially true for small companies because 60% of SMEs fold within 6 months of a cyber attack. Ignoring the risk is not an option. I hope I've shown you that cyber risk will only grow in importance in the years to come. The cyber insurance market continues to grow fast, but the risks are growing even faster than the insurance. The skills gap and the low levels of customer understanding of cyber risk and cyber insurance are real challenges to the continuing viability of this market. Undoubtedly, better customer solutions and better underwriting are needed to ensure the sustainability of the cyber insurance market in 2023 and beyond. There are those who would argue that cyber risk cannot be underwritten, that we simply do not understand the risk well enough to have an insurance product to cover it. My own view is that cyber insurance can have a good future, but only if insurers address the current challenges as outlined in this video. Thanks so much for watching today's video. I hope you found it helpful and can see why cyber insurance is constantly evolving and has a somewhat uncertain future. Now, before you go, I want to give you access to my free Cyber Resilience video workshop, how small business owners can create their first cyber resilience plan in less than 30 days. It's full of practical tips that you can implement. You should use the link pages.survivingcyber.com/workshop to get access now. And I'll also put that link in the video description below. I hope to see you again soon in another video from Surviving Cyber.